Hi, my name is Harvey Reed. I'm a junior in Market's Applied Investment Management program. I'm pitching a buy recommendation for Watches of Switzerland Group with a price target of $19.57, representing a 31% upside. Watches of Switzerland Group is the leading retailer of luxury watches and jewelry in the United Kingdom. The company generates revenue through the sale of high-end jewelry and classic watches, while offering a range of aftercare services to its customers. The firm conducts business through its own branded Watches of Switzerland, Mappin & Webb, Goldsmiths and Mayors stores. The group currently operates out of approximately 148 core stores across the United Kingdom and United States. Its multi-channel presence has been established through a network that includes multi-brand stores in travel retail, online platforms, and a portfolio of mono-brand boutiques. The group possesses strong partnerships with some of the world's most prestigious watchmakers, including the likes of Rolex, Tag Heuer, Omega, Audemars Piguet, and Breitling. The company's portfolio consists of 118 stores in the United Kingdom, 67% of revenue, and 30 stores in the United States, 33% of revenue. The company was founded in 1924 and is headquartered in Leicester, the UK. Watches of Switzerland Group's revenue has grown at a 5-year CAGR of 18.2% from 2016 to 2021. The demand for high-end watches continues to greatly outweigh supply. Thanks to its strong partnerships with brands like Rolex, Cartier and Patek Philippe, the group is able to capitalize on the strong consumer demand for luxury Swiss watches. The group holds 47% of all Rolex agencies in the UK, making them an indispensable partner and market leader. This enables the group to obtain unparalleled levels of inventory of such scarce nature, generating strong revenues that are forecast to grow 20.2% on a 5-year CAGR from 2021 to 26. Other retailers and competitors who are absent of such partnerships face high barriers of entry and are unable to obtain inventory anywhere near the level of Watches of Switzerland Group. Thus, the company has dominated the market continuously in the UK with frequent double-digit annual revenue growth. The firm has been expanding prominently into the US market and is set to take 9.8% of the $4 billion US luxury watch market in fiscal year 22, after only 5 years of US operations. US revenues are forecast to grow on a 27.3% CAGR from 2021 to 26, amid the further store expansions that are set to grow at 6% per year, and continued strong e-commerce growth, which grew 120% in fiscal year 21. The demand for luxury watches today is unlike ever before, and brands like Rolex have over 5-year waiting lists in place on some models of watch, while the second-hand market is now worth over $20 billion and is estimated to reach $30 billion by 2025. Thanks to the company's multi-channel approach, combining e-commerce with a strong customer-centric luxury retail experience, the group is still able to generate positive net income during the COVID-19 pandemic, despite the closure of all UK stores for 26 weeks of the year. This indicates a well-balanced business model that can withstand adversity. Due to Watches of Switzerland Group's increasingly strong revenue growth and dominance in the luxury watch market, it is recommended that WOSG be added to the AIM International portfolio with a price target of $19.57, representing a 31% upside. The first driver is increased demand for luxury watches. The global luxury watch market is estimated to reach $32.3 billion by 2027, growing at a CAGR of 3.4%. Watches of Switzerland Group is set to capitalize on an increase in discretionary spending, up 14.5% in the UK, February 22 versus February 21, while in the US, consumer spending increased 3.3% in the fourth quarter of 21, and is forecast to increase a further 3% in fiscal year 22. The US imported $3 billion of Swiss watches in fiscal year 21, a 55% increase over fiscal year 20, becoming a world leader. The value of luxury Swiss watches exports to the UK and US between fiscal year 10 and fiscal year 20 has grown at a CAGR of 6.7% and 2.8% respectively. This trend is estimated to continue a strong growth rate into the future, as luxury Swiss timepieces have become an increasingly favourable alternative investment, and demand continues to far outweigh supply. Driver 2 consists of geographical expansion. Since entry into the US market in late 2017, the group now operates out of 30 stores across Florida, Las Vegas, New York, and Boston. The group has the target of becoming the clear leader in the American market, predicting sales to grow from £299 million in fiscal year 21 to over £1 billion in fiscal year 26, growing at a CAGR of 27.3%. Continued store expansions of 6 to 7% per year, unit price increases of 7 to 10% per year, further e-commerce growth up 120.5% in fiscal year 21, and continued product line extensions will drive top-line revenues. The American market for luxury watches is greatly underdeveloped, with sales per capita in the UK currently 3.5 times greater than the US, indicating a significant growth opportunity. Attractive investment class is my third driver. Rapidly rising inflation has left individuals to increasingly look to real assets and goods as a hedge on inflation. Luxury Swiss watchmakers, including the likes of Rolex, Patek Philippe, and Audemars Piguet, have an extremely restricted supply and have become a favourable asset class to hold. This limited supply of watches in the primary market has tripled the price of many high-end brands in the secondary market, with the popular Rolex Daytona sporting a retail price of $63,000 compared to a secondary market price of $175,000. Luxury watches from Rolex, Patek Philippe, and Audemars Piguet are expected to appreciate 69% between 2015 and 2025, further accelerating demand from investors. Valuation. In order to reach an intrinsic value for watches in Switzerland Group, a 10-year DCF model was created, using a terminal growth rate of 2% and a WACC of 6.85%. An intrinsic value of $18.73 was reached. A sensitivity analysis of plus minus 25 basis points on both the WACC and growth rate ranged from $14.17 to $43.53. Using a PE multiple of 41.93, an intrinsic value of $22.67 was calculated. Furthermore, an EV/EBITDA valuation was calculated for a multiple of 31.35, resulting in a valuation of $15.33. By weighting the models 60-30-10, price target of $19.57 was reached, representing a potential 31.78% upside. Risks include key supplier and supply chain. The group's supplier base is concentrated in Switzerland. Therefore, a significant lockdown of operations due to further COVID-19 restrictions in Switzerland would impact the group materially. Business strategy execution. The company may fail to respond to the pressure of an increasingly changing retail environment effectively and rapidly. Customer centricity. Failure to maintain a consistent high-quality experience for customers across the sales channels could adversely affect business. Management. Brian Duffy is the CEO of Watches of Switzerland Group and Executive Director, positions he has held since 2014. Duffy has held positions on boards across multiple companies in the retail industry, including Ralph Lauren subsidiaries. CEO is also an ICAS chartered accountant and has an approval rating of 98% on Glassdoor. Anders Romberg is Chief Financial Officer for the company, with over 25 years of senior management experience, previously serving as CFO for Ralph Lauren Europe, Middle East, Africa, and Asia Pacific, and also working as financial officer at Duracell and Gillette.